All right, welcome back to Getting Past the Premium, everybody. Here with a good friend of mine, in person again. I love in-person podcasts. It's my favorite thing. But good friend of mine, Julie Richt. Julie, how are you doing today?
Good. It's been a crazy couple weeks, but...
You've been busy.
Yeah, I've been really busy. It's already October. How did that happen?
I know, it's wild. I know, we're going to get into it here in a little bit. But before we do that and everything you have going on today, because I'm excited to tell everybody what you're doing with Lucid.
Yeah.
Just give everybody your background, because you've been in the industry a long time. We've known each other for a long time. And, you know, I think you have a pretty cool perspective on the industry that I think everybody would benefit from.
Great. Well, thanks for having me. This is very cool to be a part of the Getting Past the Premium podcast. I've been a fan and a subscriber for a while now. But,
appreciate that. Yeah. Everybody should be.
Share with your friends. No, I've been in the business for about 20 years now, which is crazy to think how fast that goes.
No kidding.
And how much the industry's changed. But started at what was sort of a boutique company here in Omaha, First Comp Insurance, right out of college. They were a monoline workers' compensation carrier. What was unique about them is they had a lot of dynamic growth plans, so we grew very quickly. But it was strategically at the same point in time, both as an insurance carrier, which was non-rated at that time. I don't think we'd hear of that in today's world.
No kidding.
And then we utilized MGA program business carriers to grow in other states. So I think I started there, I was like 50-something number employee and 50-some million in premium, and grew that book to 560 million over 7-8 years. So eventually they sold off to Markel. I realized quickly that I had a passion for insurance. I think what First Comp allowed me to learn was the retail agency distribution space. Get to know them and how they do their business. But there was more to the puzzle than just work comp. So I jumped over to Liberty Mutual Insurance. And that's probably where we met, was when I started there as the territory manager for Liberty. Right. And that was really cool, just to kind of be in Nebraska, focus on the territory here, meet people from my own cloth. Liberty, big national carrier. Tons of product, learned so much about insurance. It was probably my favorite job, to be honest.
Really?
Yeah. Just, it was constantly moving strategically, but product-wise, and you just kind of always were on your toes.
Yeah,
so, but I felt probably the most sense of service in that role, in terms of working with agents, really trying to look at insurance differently, like how we could help grow your book of business versus just kind of, I don't know. It was more dynamic, I guess, in that way of different products. But anyway, was into that, but also knew as I was leaving First Comp, I always pictured myself on the agency side.
Yeah.
I think I still will. Like, that might be where Julie Richt ends.
Could be. We'll see where Lucid goes.
But I think it was more about the education of consumer, like helping consumers understand a little bit more about how to utilize insurance as part of their risk management portfolio. You know, a lot of what you guys do with Encore, I think, resonates with me, because I feel like business owners need that and need to look at it more holistically. So very eager to get on that side, working with business owners. So I left Liberty and did the agency side for a while. Was not expecting to get a phone call short 16 months later to co-found another operation. But it was an opportunity I couldn't pass up. And really, I think, escalated, you know, my skill set a lot, starting Method Insurance. It was a wholesaler and MGA for workers' compensation again. But we built our own work comp program, and we're able to deploy that nationwide in a short...
that quickly too.
Yeah, I mean, that was 3 years that we got that program up and running. And then 2 years after we launched, we were writing about $125 million in direct written premium. So yeah, it was, we were acquired 3 years into that, as you know, so that was an experience to... First time kind of going through that, like hands-on as an owner. But yeah, it's been a wild ride. So last June, I think I just came to a point where developing products was what I really recognized was my passion. And then again, kind of doing from a service standpoint of providing more for agents. I think the market, as you know, has been tough the last 3 to 4 years.
Yep.
And I just saw a need to create a more diversified portfolio. Method is owned by a claims organization that services workplace injuries. So it was a good match and marry for that arrangement, but not probably available to write other lines. So that's really where I decided to break off and start Lucid.
Yeah, absolutely. Well, and that's why I wanted you to give the background, because I think you've seen many different sides of the industry and understand probably as good as anybody the MGA wholesale distribution side, which has come more so to the forefront in the last few years than it ever has. And I think, agents are utilizing MGAs and wholesalers, and I think specifically the MGA space, getting very specific around solving certain needs, which, is how you're starting Lucid to a degree, which I want to get into. But I also want to talk through Method just real quick, because, what brought you to Method, right? Because it was already founded, but you were kind of recruited. An idea.
It was an idea.
Got it.
At the time, the founder at that time, Greg Donsbach, former boss of mine at First Comp. So we had a long standing history. I'd known Greg for probably, 12 to 13 years at that point. When he approached me, he really wanted me just to help build distribution and things. And I have to tell you though, I didn't realize it right away when I made the decision, but probably 2 months into Method, I was so grateful for that 16 months on the agency side. Because I think as carriers, you get this posture that you kind of know what you're really good at, and then you kind of talk to agents more about always like what you're really good at versus what they really need.
Yeah, that's true.
So it brought a different perspective to Method when we were building it, of like, we got to think more like an agency, not as a carrier, if we really want to build something from scratch. I mean, we started with nothing, in terms of distribution, and we had to get carriers and all that. So we were fortunate to have some good business relationships. That the technology side, or like the system side, was pretty turnkey for us. So we were up and running within 30 days and wrote our first policy.
That's crazy.
Right away.
That's wild. But yeah, I think that's such a good story, and Method's still kicking butt. It is pretty awesome. But then you decided to take the plunge and start your own thing in Lucid, and focusing on the property side of the industry, right?
Yep.
And I got to tell you, when you first told me that, I was like, wow, good luck with that. Now, you saw something I didn't. Clearly, you're a lot smarter than me. But that's such a difficult side of the business.
It is.
The casualty side is typically where you'll see MGAs play, and because there's just a lot less catastrophic exposure and all those things from a can you get backing and paper and all that. And so that's where I kind of am curious what you saw there, right? Like why you thought this is the problem that I think we can go solve.
Yeah, I think to your point, going back to the whole service side of it, like what do agents really need? Even for, Method, we were still adding new programs and diversifying the book. We had acquired another MGA, and so all that was really coming together in a form and fashion. To be honest, it was a great place to be for me too, from a career standpoint. But I just felt like there was more product missing. And when I would sit down with agents and talk about, hey, what do you really need in the market? As you know, every line of business goes through different cycles. And workers' comp is on the softer side if we look at the whole industry. And it is making money. The insureds are receiving benefits of rate reductions in that space. But then I started seeing, though, property was going in a direction of not only rate increases for 3 years running into 2023, but then people just weren't even getting coverage. Even exposures were getting eliminated. Things weren't covered. They were still paying 20, 30% more. It just seemed like there needed to be some other way to solve this problem. And while the property market is huge, and we won't be able to solve all of it right away, we picked out certain segments that we felt like, okay, we can support this underserved market and show that there's an ability to do it differently with more technology and data, and streamline the process to where we're really getting in front of the right accounts first, we can solve people's problems in property.
Yeah. So let's talk about why the property market in general first. And like, how do we get to where we're at? Because I think you're in a unique position to maybe help agents explain this, because not only explain it to the client, but just for their understanding. Because I think, it's easy to be like, well, look at all the big catastrophes that have happened, which is obviously big reason.
It's true, yeah.
But I think there's many other factors that go into that. So talk holistically about your thoughts around the property market in general and where we're at.
Well, and I think even if you take a step back and you just look at kind of the supply and demand of insurance, right? So in the last 10 years, I would say kind of the top segment has always been the national carriers, or maybe more traditional carriers, even regional carriers. And what's changed with property so much is concentration, or being the number one writer in a state was kind of a badge of honor, right? And so severity has increased in terms of convective storms, and the patterns are different because a lot of our states in the Midwest here, they're growing and they're getting more into areas that were never hit before, but we're adding population in parts of states that never existed there. It's not to say the storms weren't there,
That's
right? If you look at the weather patterns, it's not to say the storms didn't exist or that the severity of that storm didn't exist, but population's growing. And you look at Illinois, I mean, even North Dakota, South Dakota, Nebraska, Iowa, perfect examples of all that. Where when you have a national carrier that's writing 2/3 of the state or 1/3 of the state, they could sustain it maybe for that 6 to 8 years, but now they're going on 12, 15, and that's hurting them. And it's personal lines and commercial. Now, Lucid's focusing in the commercial segment, and personal lines is kind of in a different, I think, situation than commercial will probably bounce back in a different way than personal lines will. But as a whole, that's what needed to come out, was different ways to write those accounts. It used to be law of large numbers. Right pricing, provide consumers lower pricing, but write more consumers so that the insurance carrier can still in aggregate make more money. I mean, rule of insurance is get enough premium to cover exposures, right? So when that scale started tipping, and then you have people starting to exit or change their appetite, now you've got still low premiums and little capacity, but still the need. So we've imbalanced ourselves big time in the last 6 years. What needs to happen, and I think you've seen it, and agents have had a tough time probably explaining rate increases the sizes that they had for the last 3 years, but we need to right size it. And so that is going to take more than 3 years. A normal hard market cycle, lasts 6 to 8 years at max. I mean, we're in the 6th year now, I think. And we still got a ways out. So that's why the MGA ecosystem, I think, has really exploded in the last, it's exploded in the last 10 years, but really over the last 5 years, because you can get more niched and you can get more specialized. And now we're kind of breaking down these segments and providing more adequate pricing, but actually providing more coverage potentially. And that you have underwriting expertise, so they know the exposures better. Like, think about it. I mean, when I was at Liberty, I mean, and still they can write a lot of stuff. But if your underwriter is an expert in all of those industries, you also don't know the geography. MGAs offer a more niched, nuanced ability to bring better underwriting or more sophisticated underwriting to the table. And ultimately, that's going to help agents and insureds long term.
So you said a couple things in there that I want to dive down on. Getting more specific with coverage and the coverage that we provide. And I know this is feedback that we get from insureds a lot, where it's like the coverage form essentially and everything that's included, right? Like, I'm not concerned about an aircraft falling out of the sky and hitting my house or my building, but it's included. And obviously we know what's going to drive the rate and the premium, and it's in a few exposures. But I know of a lot of people that would say, I only want to buy property coverage for these specific things. And in the past, they just haven't been able to do it, or at least economically do it.
Yeah.
Deductibles are another thing where that it's just gotten crazy on the ability to, or for these clients. I mean, they're self-insuring and being forced to way more than they ever have.
Absolutely.
And there's a level, I know certain clients that are like, well, again, I'm basically already self-insuring the building.
Yeah.
Like, can I just buy, coverage for my roof if it gets hailed on or whatnot? So talk through like how we can solve for that.
That's a great point, because I would say too, like in the industry today, somebody who's been in it for 20 years, there's been business owners you've worked with that have owned their business for 30 years. They haven't seen a market like this.
Yeah.
This is new for everybody, right?
100%.
So we're all kind of feeling our way through some of that. But to the point of, that is, I think, the value of an MGA. You got to think, as a large national carrier who's writing in all states, who has to abide by a ton of regulation, to change or tweak even the simplest forms, that's a huge process. And it's a huge cost,
Totally.
So I think that's kind of where I would say, if I look back 10 years, you couldn't see what's happening now then. But what you were seeing 10 years ago was an advantage to insureds then, where they were getting a lot of coverages for really low cost, and it seemed like a great deal.
100%.
But
who was looking ahead?
Right? But who was looking ahead?
This is going to be a good idea.
But again, they got so large where those policies became inflexible.
Yep.
And they couldn't change with claim trends. And that's not on the carrier. I think what we're seeing from those carriers, they're becoming really, really good at writing in certain segments. I would even say small to mid-sized businesses, they are getting the advantages of still those policies, and they should, because when you're a starting company like myself, you don't always know the exposures you're going to have, right? So to grow and be with a policy that's maybe a little bit more broader, and that's a benefit still. And that is where those carriers should probably be supplying that product. It's when you get into somebody who's been in business for a while, who understands their risk exposures differently, and who is buying up other buildings and properties, or picking up new contractors from a liability standpoint. Like, those are way different risks than, today, even than what it was 10 years ago too.
And they might want to take on different exposures. Maybe they have built up a cash reserve. Maybe they, there's other things that those businesses have had the ability to do sometimes, but the insurance hasn't necessarily been flexible enough to follow them.
Right.
So,
and again, because it would change their entire model. So I think what we're seeing right now is we're figuring out as a whole that we need to focus on, especially mid to larger size businesses, provide them more specific type of products. So, and I do think you're right, like most MGAs are probably starting in the casualty space. Forms are a little bit easier to work around or write. I think too, the industry 15 years ago, I mean, if you were not admitted, like you weren't even coming to the table. And now I would say, just even some of the data research we've done in property, you've got states that are moving 25 to 32% new business into E&S instead of admitted markets anymore, which that's a huge shift.
Yeah.
That's a huge shift. And there's even times where we're seeing E&S is lower priced than admitted, but you can't sell an excess and surplus policy without having the admitted markets not offer. So I think even that, to your point about like, how do we explain this to insureds and agents? They're still figuring it out. I mean, I think now this is I'd say a good third year into that, where people weren't catching non-renewals, right? So your carrier's like, well, I'll offer, but it's at these terms admitted. Well, that doesn't help the insured when you go to the non-admitted space and you're getting more tailored. We only want to cover X, Y, and Z, but it's less premium, right?
Yep. Is it? I mean, should be.
As it should be. Right? But if the admitted market is continuing to offer broader coverages at higher pricing, you have to offer that. Yeah. So I think we're finally seeing that in this next 12 to 18 months. That's not going to happen as much. But I think that's what's been so hard for the agents in the last 2 years is like, I've got broader product, but they don't want it. Yeah, but I have more tailored product and it's cheaper, but I can't sell that at the same clip, right? So working with the carriers that are in the admitted space to kind of say, I've got a placement over here, but it's all about timing. You got to get out in front of it. For agents, talking about renewals at 90 days right now is a must, especially if you're talking about larger liability exposures or
and it's
property
hard,
exposures.
because every account is being remarketed or non-renewed because you're not sure what's going to happen. So it is very difficult to keep up.
And your carriers aren't always giving you guys the answers, which I think is hard for insureds to understand, because you're holding them down to the wire too, not because you are not wanting to find placement for them, but because you're not getting responses from carriers.
100%
Carriers are very over inundated with access to accounts. So, and that's where I think more now than ever in my 20 years, relationships matter.
Yep. I think relationships and the story you're telling to that underwriter matter, because we're all crazy if we think that they're operating off of, this one came in 5th, I'm going to work on it 5th. Like, no. And they have to. They're going to triage. They're going to say, what is my best opportunity? And those are the ones I'm going to go work on. Yeah,
and that was a core principle of even at Method into building what I wanted to do at Lucid was we've got to change the dynamic of pipeline management between agent to whether it's an intermediary, wholesaler, MGA, or carrier. There's a better way that we should be streamlining information and accounts that better match. Because I think with carriers, you're always, even in a hard market, you're over inundated right now with too many accounts. In a soft market, you just want to look at everything. And both of those scenarios are creating chaos because you as the agent are asking me as a carrier, can you write X, Y, and Z? My answer is always going to be, I don't know, send it in, right? Let me take a look at it and see what I can do. And I mean, still today I'm doing that because I don't know, as a specialty wholesaler still on Lucid side, I don't know yet because I'm still working these carriers like you're working your carriers direct. So anyway, it's an interesting dynamic that I think our industry has to figure out, like how do we get an account in and quickly scrub it against what are the available markets or what is the actual appetite and get back to you guys. Because a no is just as powerful as, as an indication or, I'm going to take a look at it further.
Totally agree. And I think, too, it's necessitating more, niche focus is the term going around, but just more focus from the agency's perspective to say, what do we want to work on?
Right.
And then you can, if you say, here's the classes of business or the segments of business that we really want to target. I mean, you're going to have things outside of that always, right? But here's our target. And then you can go align with the right tools to solve for that. And I think we've been on the consumer, the insured side and the agency side have been spoiled with soft market for so long.
Oh, yeah.
And it hasn't really, the business owner hasn't really had to think about it, right?
No.
They've had relatively cheap premiums, and they could shop around and probably find something as cheap or cheaper. And it just wasn't something.
Even with claims.
100%.
Even with claims.
It just wasn't something that, and then on the agency side, we could just send it into everybody, and you coach clients, and you want to do that strategically, and all the things. But at the end of the day, I think we're just spoiled around having to get creative with how we set these programs up. And it takes a lot of times a shift like this to make a leap forward. But we've always said, like, we want the best tools in the toolbox. And it was always frustrating to me and to us when you knew that there was a better option for, say, a property on an account. But you have a package carrier that basically leverages all the lines to get you where they want to be and where so you really can't put that into the mix. Well, now it's kind of all being like the carriers want you to separate it out. Where that's going to cause operational challenges on the agency side, already is, and I think that's only going to continue.
Right.
But I also think it could be ultimately a better system for the insured.
Well, I think you're going to get more specialty carriers that even are better at handling claims for exposures that are that way. I always think about in terms of from a liability standpoint. I mean, when you have something go awry with contractors involved or different agreements, that should be a specialty carrier. A lot of times in property with co-insurance and everything, you're seeing carriers just settle because it's easier. Versus
and what precedent does that set?
Right. And again, I'm not arguing it either which way. I'm just saying as a whole, I think when you're going to be working with claims, whether it's TPA or in-house carriers that are specifically aligned with property exposures in agricultural, right? They're going to know the situation and they're going to work with that insured to try to get them whole or back to business as soon as they can, you know? Which before it's like, I've got how many claims, you know, and they are usually divided by line of business, but maybe not by industry exposures.
Yeah. Well, and I think that only leads to, ideally, if things go right, it ideally leads to lower costs over time.
Yep.
Because you have more specialists that can get claims done quicker, that can settle them correctly, that aren't doing what you mentioned, and just settling things they shouldn't. I mean, and I don't know if this is accurate, it's just my perception of the work comp side, right? I think work comp for a long time was the hardest line of business we had.
Yes.
And then you saw the emergence of MGAs that were very specialized. And it was like a deal to bring in a standalone work comp carrier, right?
Oh, yeah.
Well, once you do a few times, you actually realize they know what they're doing a lot better than this package carrier does. Like, that's all they do.
Yeah.
And it actually can become a positive for the client. Now, again, for years, it was always coached, just keep everything with the package carrier. That's better, you know, for the whole thing. And you can market the account as a whole, which that's true as well, right? But I think as these things get more decoupled from package business, and even at the national carriers level, like they're going to have their niche focuses where they're really good.
Absolutely.
And that can only mean like a better experience for the client. If we as the agency can bring all these things together in a cohesive experience, I think that only ideally long-term creates a better experience, cost, coverage for the client. They can take more control, because that's the thing too, where clients feel like they have no control over their insurance, right?
Right.
It's just, I get this renewal every year and it's got a whole bunch of crap in it that I don't know what it does.
Yeah.
You know,
well, I would say too, when you're with a larger carrier, again, your renewal is only as good as their total performance.
Yeah.
Right? So again, I mean, that's insurance, and that's what we're all buying for, is catastrophic coverage. But if you had a very profitable 6 years run, if they haven't, because of other things or other territories, you're not getting the benefit of that. So I do even think, to your point about like, this is going to drive a better experience downstream. It absolutely will, because you'll be more merited and you're going to be more valuable in a smaller book of business than $100 billion book of business, right? Yep. If you are a $100,000 account out of $100 million in premium, well, that's a good size account that carrier is going to fight for a little differently, or at least work with you to try to save it or renew it, right? Yep. So I think that's going to create a better culture for insurance and consumers too. Yeah,
I do think agencies are going to have to figure out how to bring all these pieces together, because again, it's going to be some operational challenges.
And that's the same for me as an intermediary and in the MGA space, because the more specialty products by line we create, that's a different rating system, and that's a different claim system. And so that is, again, if I look at what I built first, maybe that I didn't build first at Method, was a data warehouse and working with systems that can talk differently with us. So our core foundation is data mining.
Yeah.
And so, which is not where I don't think most MGAs are going to start with product and driving revenue, and those things are very important to Lucid's model as well. But if you can't control the data flow in and out, then you're going to get handcuffed by systems or by limitations of others.
Yeah, so I wanted you to dive into that, because I know that's been a big focus for you. But how you guys are focusing on data and go as deep as you want, but then also your, I don't know if commitment's the right word, but your belief in transparency throughout that process.
Yeah.
Because again, as we're talking, like, this model is going to present other challenges to the agencies, but I think, again, the way that you're approaching it is unique to other MGAs and carriers, and so I want you to talk through your perspective on that a little bit.
I hope that MGA Future Forward, if you look at it that way, is really focused on product and technology. I think if you look at the last 10 years, the buzzword was InsurTech, right? And I do believe in the InsurTech process and model. 100%. I think, though, the approach to it was, we can solve a lot of problems And really, they didn't really understand the complexities of insurance across the entire operation or the entire way to generate revenue. So it ended up solving maybe, 1/10 of the problem instead of the holistic problem, right? Yeah. So then it became a channel disruption in how to grow. And now I think MGAs have learned from that, and we're sitting there as I guess the segment of that of our industry saying, how can we still leverage technology but create a different experience now back to the consumer? Yeah. When I started on the carrier space, we were all about customer service. I mean, that was what in early 2000s differentiated a carrier, was like, we'll be willing to pick up the phone, we'll come meet you in person. You want me to help you put applications in? We'll do that. So I feel like that brand kind of got lost, that technology minimized that. And now I think we're coming back through that. Like, again, relationships are more important now than ever in our life cycle. And so I think the MGA space is kind of figuring out, our program administration space is figuring out that we've got to bring something different to the table to agents and consumers. And so Lucid's whole name is predicated on that transparency. So I think that there's a way to, from point of submission, collect data, but also enrich data where we can give back to the agents. Because, I mean, again, I remember I always use the example of, I walked into a machine shop in Grand Island, Nebraska, prospecting, and I'm just sitting there and talking to them about their business, and like their business model I could understand, but there's no way I knew what the value of their building was or the value of their BPP.
And they don't either.
And they don't really either. And so even as I ask more questions, I'm like, where can I go, like really figure this out? And you go to the assessor, you go to like cost estimators, but nobody really knows. Yeah. And then I always felt like I wish there was better information to give my client to think about things like that. So I kind of took that experience into what we're looking at with Lucid, saying there is third-party data out there that is becoming more readily available. I would say 10 years ago it was not, but now there's a lot of sourcing we can do. And so we're looking to build models where if you send me in a property account, I want to provide you feedback of, okay, if that's what the insured's been insuring it for, think about it differently this way. We're getting data intelligence or whatever you want to call it that is saying that really it probably should be at this based on construction cost increases of that area, inflation rates, material costs. Like, yeah, maybe when you wrote the policy 6 years ago, that building was 10 million, but it's probably 18 million now, And I think every insurance agent wants to always have that conversation with their client of, should we increase this year? And I mean, you tell me, I think this year was really when carriers kind of put a requirement on adding the endorsement for inflation. But even 2 years ago, they weren't doing that.
Well, and it's
right?
beyond that. I mean, there are a lot of times just, you used to have some negotiation on that,
right.
And you could get them to agree if you had, maybe you had a contractor look at it or something. But it seems like now it's just, nope, our model tells us this. And you're like, there's no way it's going to take that much to build that building.
Right.
But I also don't know.
If the model's telling you that, tell me why or how.
Give me ammo
that's what I want to create is like, I might be totally off and our model says 18 million, but I'm going to tell you at least what factors went into that so you can have that intelligent conversation with your client.
Exactly.
You ultimately should be able to make that decision. We just want to empower you with information to navigate that conversation.
Yeah, it's ultimately the insured's decision, right? But what is very difficult on the agent is when we get a mandate or when we get a carrier saying just, hey, we think this building should be increased at this, of course the insured is going to be like, no way, Well, then I'm just like, I don't know.
Yeah.
Like, that's what they're telling me. You're telling me this. Like, you got to make the call.
Yep.
Like, that's just not, it never feels good.
Yeah.
Right? And like, I can run a cost estimator and I can do all that. But again, that, clients that start asking questions, you don't have anything to go back to. And it is frustrating. No. And so I'm glad that you're tackling that challenge.
One piece at a time. I'm trying to,
But, and then, I mean, talk about the transparency side of that. Yeah. So how does that what's your vision for that piece?
Yeah, because I think that helps. If we had that data flow from submission, and I'm talking all the way up to like reinsurers, then we have a more realistic viewpoint at any point in time when we need more capacity, or if we want to shift pricing, or if we want to add coverage. So having that transparency where I have, from time of submission on, I can provide all the way up to the reinsurance market what is really on the ground of our book of business, or reflective of our book of business, or maybe even reflective of a future opportunity, then that transparency is going to help us all. Because right now it's kind of, well, I'll take this bit of information and I'll take this bit of information, and yeah, you work somewhere, but I don't have that data. You know, it's all kind of a theory until you can really prove it. And I think that we're going to be able to create that, where if we write an account, they're going to have, again, a better claims experience, because our claims TPA is going to be hands-on involved in the systems and the data we already have. They're going to know right where and what conversations were had. That's going to create a better experience there. And then think about renewals, like for agents, where it's like, here's everything that happened, right? Yeah. And so I think it's going to help from all those buckets. I mean, and even from a carrier standpoint, and again, the MGA space, I would even broaden to the program space, is so different than even 20 years ago when we built programs. A lot of the large national carriers have a program division now, trying to move higher hazard or more specialty coverages through those engines. Yeah. And so even for them, they have the data in-house and can't figure out how to use it. You know, their ecosystems are too big. They're too compartmentalized. So I think that transparency of, we're still going to have multiple systems. Everybody's going to, you know. I don't believe there's one system that's going to be from start to finish. No. And I think with InsurTech era, you've gotten really good technology to fix this piece or address that piece. That's what we should be leveraging from the InsurTech era.
And the beauty there, it seems like, is most of the InsurTechs coming out to solve a pretty specific problem, understand that they're solving a specific problem and need and want to then connect to the next part of that.
I think that's really changed in the last 2 years.
I agree.
But I don't think even 5 years ago it was like that. So it's really great to see how fast that's picking up and changing already. But I totally agree.
Yeah, because I think that's where you're going to want people to be able to figure out each step of your process and figure out the tech that needs to be, if tech, but assuming that you can get some technology to solve for that, you can piece it in and not have to re-enter data and, you know, redo everything you've already done 6 times. It just
think
seems
about
like
the risk scoring you're trying to build in terms of like renewal, like the information at a producer's fingertips to know right when they open up a renewal, like these are the exposures that have increased from whatever modeling, you know, like agencies are there to build the relationships to get in front of the clients. We as intermediaries, carriers, and programs need to provide them better insights, you know, to have that conversation. And so I do think there's a whole level of connectivity between agent and carrier or broker, or however you want, whichever intermediary market you're using, to better align that conversation for them at any point in time throughout their life cycle of the policy with the insured.
Yeah, I agree 100%. So we've covered a lot. Give us an idea of your life cycle. So if somebody's sitting out there being like, wow, I would love to learn more about Lucid, and you know, if I have access and all of those things, talk a little bit about that and how they can get in touch with you guys.
So today we have a specialty wholesale brokerage set up. So we're accepting submissions for all lines of business. So, you know, excess casualty is a tough marketplace. Obviously, commercial property is the majority of what we're seeing. We're doing some unique things with parametric. We have a lot of good markets for wind, hail, buy downs, cyber insurance, any kind of professional liability. So on that side of the fence, we're really building out our distribution and trying to learn more from a product standpoint of what's working, what's not. And so in that channel, we're building out that kind of interface experience that we want. So the interface isn't constructed today. That's a 2-3 year goal for us. But this is kind of the start of us collecting all that. And then our agricultural property program, we're looking to get launched beginning part of 2025, 1/1.
That's awesome.
Yeah, so we'll be rolling out some more specifics about that. And that will be a very customized, exclusive product that certain agents that have that specialty will be able to access, but I'm really excited to get in the consumer's hand and really kind of solve some problems in the agricultural space right now.
Yeah, absolutely. So how do anybody out there, how do they get a hold of you? Who do they reach out to?
Yeah, we're on LinkedIn. You can follow us on LinkedIn. We put out some content there about what's going on in the marketplace. Also, you can go to our website at lucidins.com. And also there, if you're a broker or an agent, you can sign up with us there, get some information about our product. But also, if you're just looking to learn more about us, we're all accessible on the website too.
That's awesome. So yeah, if this is something that you guys are running into, resonates with you, I would highly recommend a conversation with Julie and her team. But anything else we didn't hit on that you think is relevant for everybody out there?
I think really lean into the people that you trust and enjoy working with, because even if they don't have the answer, they have access to networks of people that can help find the answer. I think the market is fragmented as a whole, and everybody's feeling it at every level. So I always say start with grace. You know, it is a tough market out there, and I think we're all trying to figure it out. But for consumers, I think it's very optimistic to see where we're heading, especially in the commercial insurance space. But for agents, you know, find the people you can really lean on, because they're going to help find the avenues for you. And I also would say work with people that are hungry. Like, I know I can speak for Lucid. We're hungry, but we treat every submission that's coming in like a new opportunity where we can prove ourselves. And there's something about that, you know. Not everybody's got spikes in our industry anymore, right? You know,
that's so true.
They're sitting back, and some carriers have that advantage where growth isn't top of mind. So find some people that are excited about writing business, and you'll feel that thrive again, I think.
I agree. Yeah, align yourself with, you know, finding accounts that fit there. So.
Yeah, absolutely.
Awesome. Well, this has been great. I appreciate you coming in, and hope everybody took a lot of good stuff out of it.
Thanks for having me. Appreciate it.
Absolutely. So we'll see everybody next week.